Today is on a Sunday, nothing much going on in the Forex market right now. I'm doing a pre-market analysis, trying to understand what the market is doing before the market opens and I start looking for my entries. So today I want to look at GBP USD, Euro USD, gold, and I also want to look at the DXY, because normally when you're trading these three pairs, you normally want to understand what the DXY is doing so that you can be able to find the best entries in the market. So I'll do my analysis all the way from the bigger perspective, all the way from the 12 months time frame. So I'll start my analysis all the way from the yearly perspective, looking all the way to the monthly, daily, then all the way to the 1 hour time frame, then try to find the best entries probably and see what the market has been doing. So right now I'm on a monthly time frame, and as you can already see, we've been on this upward channel for a very long time. That's probably since 2008, all the way from down here we've been on this upward channel, and this market has been bullish all that time. So right now, this is what the market has been doing at the moment. So I want us to try to understand what the DXY has been doing, because normally when you understand what the DXY is doing, then you can be able to tell the direction of gold, GBP USD, and Euro USD, because these pairs, they do depend on the dollar heavily. So let's look at the market. So at this point, I already marked my key areas. These are the immediate key areas that I was looking at. Let me mark others so that we can move together again. So we had another key area at this point down here. This is another support at this point. We have this support at this point, then we have a resistance at this point, then we have another resistance up here. So you can already see from this monthly time frame, this market had already given us our first touch at this point down here. Then after giving us this first touch down here, we went all the way up. We were moving on these impulse move corrections. It gave us this impulse move again. We had that correction. We had an impulse move. We had a correction. So this is how we've been moving all the way. Then the market gave us about another second touch at this point, whereby after giving us this second touch from the monthly time frame, it gave us this double bottom. I don't know if you can see it. We have this double bottom down here. Then after giving us this double bottom, the market broke above this correction channel, then continuing to push upwards with another impulse move again. So after this, the market came all the way to this area, giving us our third touch from the resistance area. So we had this first touch down here, second, third. Okay, these are our fourth touch at this point. These are our fourth touch from this point. So the market came here and it failed to break above this area. So normally after the market failing to break, we expect it to give us that push to the downside. So after this, market came to this key area that was up here. So it started giving us this kind of retracement. So we're having this retracement at this point. So there's a possibility that this market may come all the way down here to give us a third touch. There's a possibility that this market may come all the way down here to give us a third touch before probably continuing to push upwards. So this is what I'm looking at the moment. So this from the monthly time frame. From the monthly time frame, probably this market might come down maybe to this area, do something like this, break below that area, then go all the way to this area. Then if we come to this area, I'll expect something like this, give us at least a double bottom, then break above that correction area. Then now we can now take our entry and push all the way up there. So this is the DXY. So I want us to go to the daily time frame. Probably let's go to the weekly time frame and see what the market has been doing from the weekly time frame in the near past. Yep. So let's look at the weekly time frame. Again, if you look at this market, before I go to the weekly time frame, if you look at this market, it's giving us this bullish pennant at this point. We have this bullish pennant at this point, whereby this market is telling us that the market broke above this downward channel. Then after breaking above above this downtrend that we had at this point, but this market again failed to break above this key area at this point, because if it could have broken above this area, which means we could have broken the structure, the downward structure, and now we should be looking for buy entries probably after breaking above this area. But as you can already see, the market came all the way to this area and failed to break above. You can see this market failed to break above this area. It came up to this point and reversed immediately, so which means this is a very strong key area, because this is a monthly time frame. I want us to go to the weekly time frame. And see what is happening in the weekly time frame. So this is what I want us to look what the market was doing last week. This is what the market is doing from this. You can already see after we had that impulse move from down there. So this is just a correction. We are having this correction, but this market has been around this area for a very long time. We've been rejecting around this area for a very long time. Came down, gave us these left shoulder, right shoulder, head. Then we pushed up. Let's see what happened there. So I'm seeing this inverse head and shoulder at this point. We have this one, this is left shoulder. We have that left shoulder. We have the head down here. Then we have this neckline at this point. We have the right shoulder at this point. But still the market has not broken above this neckline, which means that inverse head and shoulder is still not ready. So let me show you what the weekly time frame, what the weekly candlestick is doing. So this was last week. This was the last week's candlestick. It failed to push upwards. So probably, as you can already see from the weekly time frame, the market actually is on a downtrend, because we had this bearish candlestick at this point, then we had this small bullish candlestick at this point, but the buyers were outweighed. So we had this bullish candlestick at this point, but the buyers were outweighed by the sellers at this point, so which means the market continued pushing to the downside. So right now this is where we are at the moment. So looking at this market like this, this is some kind of impulse. So still we are on a downtrend. So, and we can already see from this weekly time frame, this market gave us this impulse move, then we had a correction. We had this small impulse move at this point again, then that correction, impulse move. So we had this impulse move to the upside, then we had that correction. The market broke above that area, pushed all the way upwards. So what I'm looking at the moment, so this is what I'm looking at the moment from this market. So yeah, so I was expecting if this market did break above this area, then come back. So I could have expected now to continue pushing all the way to this area. But as long as this market stays below this area, that means that we're still on this downtrend from the weekly time frame and from even the monthly time frame. That means we're still on a downtrend. So let's go to the daily time frame. Let's go to the daily time frame and see what's happening from the daily time frame. So this is what's happening in the daily time frame. This is our immediate. So normally when you're looking at the market, you should understand that we normally have trend lines inside trend lines. So you should always be keen and look at those areas, because that's how you try to understand the market. That's how you find the best entries in the market and try to understand what the market is doing. So after this point, let me just push this backwards so that this chart can be clean. It doesn't have to be that dirty. So at this point, this is the 4-hour time frame. Looking at this 4-hour time frame, this market was down here. We pushed upwards. We had that correction. The market broke above that correction area, gave us that another impulse move, pushed downwards. We have this impulse move, so it pushed downwards. all the way to this area. So this is from the bigger perspective, this is from the weekly perspective. So the market was doing that. But from the daily time frame, we are inside this channel. This is what the market is doing inside here. This is what the market is doing inside here. So last Friday, the market failed to break above this area. So we are on this downtrend at this point, moving down, giving us that impulse, correction, impulse, correction. So right now this market failed to this was on Friday. The market failed to break above this area. If it could have broken above this area, then we could have taken our entries and taken all the swing to this area, having our take profit at this point. This could have been our first take profit, then our last target could have been at this point, then try to see whether this market will break above this area. But the market didn't break above this area from this 4-hour time frame. Daily time frame. The market didn't break above this area. Instead, we had this bearish candlestick at this point, and you can see it's a very strong bearish candlestick. So which means that this market was giving us this impulse correction, meaning that we're still on a downtrend from the daily time frame. Let's go to the 4-hour time frame and see what's happening there. So this is my 4-hour time frame. Looking at my 4-hour time frame, you can see what the market has been doing from the daily time frame. Let me use my brush to show you, at least to elaborate to you what the market has been doing. So we had this impulse move all the way down here, then the market gave us that correction. It broke below that correction area, then we pushed all the way down here. So what we're having right now is a correction again, and you can already see from this 4-hour time frame, the market has already broken below the correction area. So there's a possibility of this market pushing downwards. So if we understand that this is what will happen, and this is normally what happens when the market is giving you these impulse correction movements in the market. Yeah, so let me just remove this brush, Yeah, so this is the 4-hour time frame, and when looking at the 4-hour time frame, let me show you from the 4-hour perspective where we are at the moment. So this is what the 4-hour time frame is looking like. We had this impulse correction, we pushed all the way up there, we had that one, we have this. So this market has already broken below this correction area from the daily time frame, and normally when the market is breaking below the correction area, which means that we should continue pushing downwards. Probably if the market does come down here and give us this double bottom and probably fails to break below this this key area at this point, then we should expect the market to continue pushing to the downside. Then that's when we should be saying that the dollar index is pushing all the way down. But still at this point, so after the market breaking below this correction area, so probably what is happening, the market is just giving us a correction or a retest to this area before it continues pushing to the downside. So the first target should be at this point. So this should be the first target. So which means that there is a possibility of this. There's a possibility of this DXY giving us this kind of retest at this point. Probably we can come to that point, or it may go all the way to this area. Then we push downwards. Again, give us a retest, then something like that. So probably this is something that may happen. And if you look at this point, if you look at this market at this point, there's this structure that may form at this point. So maybe this is what might happen at this point. The market might come up. You see, from this point, it came out, gave us this left shoulder at this point. We had this left shoulder at this point. Let me show you. So we had this left shoulder at this point. After having that, we had this left shoulder at that point. Then we had the head at this point. Then it came down to this area. Then, so probably there's a possibility that this market will come up to this area and give us there's a possibility that this market will come up all the way to this area and give us that right shoulder before it continue pushing to the downside. So there's a possibility of something like this happening. We have this left shoulder, head, right shoulder. Probably it can come all the way to this area, then give us this head, give us this left shoulder at this, right shoulder at this point. Then after that, now we take our entry from this point. So probably we can take our entry from this point after the market giving us confirmation. We can take our entry from this point. Take your entry from that point, having a stop loss just right above this right shoulder, then push all the way down here, taking your first take profit. Probably at this point this should be your first take profit because this is a key area. Then after that you should continue to hold it, take another take profit probably at this point, then you hold it all the way down here. So that's probably what I'm looking at, and that's what maybe I'm expecting this DXY to be doing. And if the DXY behaved this way, then that means that the dollar index, that means that the GBP, USD, Euro USD, and the gold market will be buying, will be bullish. So if this is what the dollar index will do next week, then we should expect to look for buy entries in the gold market, the GBP USD, and any other USD pair. So after understanding now this is what is happening, let's look at the 1 hour time frame and see what happened in the 1 hour time frame. So this is what the market was giving us from the 1 hour time frame. This is what the market was giving us from the 1 hour time frame. From the 1 hour time frame, we had this impulse correction, impulse correction, impulse correction. Then the market came up again, gave us this double top at this point. So we had a double top at this point. Look at these double tops that the market is giving us at this point. We had this one, then we had another double top at there. So we had these double tops at this point. That's another confirmation, or that's another confluence that the market wants to start giving us some kind of reversals, or the market is giving us reversals. So when you look at this market, it came up to this area, went down a little bit, came up again, gave us the double top, then we pushed down. So what I'm expecting this market to be doing, it pushed all the way down here with this impulse move. So what I'm expecting this market to be doing is probably, I'm expecting it to give us a correction, because after an impulse we expect a correction. So I'm expecting this market to give us a correction probably to this area that I've shown you at this point. Then if it does give us this correction to this area, that means that it will have given us, if it does give us a correction to this area, that means it could have given us a right shoulder. Then after giving us a right shoulder, now we should wait for this market to break below this correction area, then we take our entry at that point, having our take profit all the way down there, but taking some entries, taking some profits at these key areas that the market is giving us. So that's what I'm looking at in the DXY, and if that does happen, that means that now from the gold market and the GBP USD and the Euro USD will be going bullish in those markets. So I want to go to the Euro USD and see what is happening in the Euro USD. Where is the Euro USD? So here's the Euro USD. So I want to delete all these structures so that I can show you. So this is what happening from the Euro USD. Let me go to the weekly time frame. Let me first of all delete some of these structures, just to make sure this chart is very clean. So looking at the market, let's look at the market from the weekly time frame. So this is the weekly time frame. I want us to go to the monthly time frame and see what Euro USD was doing from the monthly time frame. So looking at the monthly time frame, from the bigger perspective, this market is on a downtrend. Looking at this market, it's on a downtrend from the monthly time frame. And you can see, guys, when we looked at the DXY from the monthly time frame, the DXY was on an uptrend. And when you look at the Euro USD, the Euro USD is on a downtrend. What does that mean? That means that whenever the DXY is strong, that means that the dollar is very strong. So whenever you see the DXY moving upwards, that means that the dollar is strong. Now it should be pushing these currencies that you're trading against the dollar, that are trading against the dollar downwards. That's exactly what the market was doing at this point. So this dollar was pushing downwards because the DXY has been strong all the way from this point. That's from 2008. This is from 2008 all the way down here where we are at the moment. So still we have this gap that this market hasn't filled at this point. So there's a possibility of this market coming all the way to this area, and probably if it fails to break above this area, then we should expect this market to continue pushing to the downside again. So if it does fail to break above this area, then we should expect it to push downwards. But if it breaks above this area, then this should be the key area that we should be looking at. Then we have this area at this point. This should be the first key area that we should look at from the monthly perspective. So we should expect that if it does fail to break above this area, then we should take our entry from down here. Then we're having our target at this area, then looking how the market will react around this area. Then if it does break above this area, then now we should expect it to continue pushing all the way to this area up here. This should be the final target, but that is from the bigger perspective. That's from the swing perspective. So if you be swinging and taking your entries, maybe holding them the whole year, that's probably what you might be looking at in the market. Yeah. And also there's a possibility of this market giving us something like this. There's a possibility of this market giving us, we had these, probably we can call that a right shoulder. We can call this the left shoulder. Then we had the head down here. Let me just put it like this. Then we had the head down there. So we had the head down there. Then maybe we come all the way up. So if this market does something like this, give us the right shoulder at this point, then now we should expect it to push all the way up there. So there's a possibility of this market giving us something like this. But this is something that should happen in the long run. This is something that should happen in the long run. It might take a whole year for this market to give out a structure like this. But right now we're looking at this market, understanding that we are on a downtrend from the bigger perspective. Now let's go and see. Let's see first of all this monthly candlestick, what it's doing. Looking at the monthly candlestick at this point, this monthly candlestick is bullish. When you look at this monthly candlestick, it's bullish, and it's coming from an area. It's coming from a key area that it failed to break. So we had this market coming down, retesting this area at this point. It failed to break below this area, and right now you can see after failing to break below this area, which means we're pushing upwards. And normally, guys, one thing that you should normally be doing whenever you look at the market, maybe you are trading Euro USD, GBP USD, gold, and you see that from the monthly time frame, the candlestick is bullish, and you are looking for sell entries in that market. That means that you are wrong in that market. You should always be moving towards the direction of the monthly candlestick. So if the monthly candlestick is giving you bullish structures like this one at this point, you can see how strong it is. So means that you should be looking for you should be looking for buy entries in that market. So let's go to the daily time frame. Let's go to the weekly time frame and see what is happening there, and try to understand what the market was doing from the weekly time frame. So looking at this weekly time frame, I can see something like an inverse head and shoulder from this point. Let me show you. I can see something like an inverse head and shoulder. So we have this level down here. This market is giving us an inverse head and shoulder at this point. So we had this left shoulder at this point, we had the head down here, then we had this right shoulder at this point, and the market respected this area, pushing upwards, which means that there's still a possibility of this market continuing to push all the way up there. Because when you look at this daily time frame, when you look at this weekly time frame, you can see that this market had already broken above these. This market had already broken above these. So this market had already broken above this downward channel. That means that it had this possibility of continuing to push upwards. Let me just do this. So if you can look at this market clearly, look at this point. The market came all the way down here. We came down, then this market closed above this area with this bullish candlestick. After closing above that area with this bullish candlestick, so this candlestick that was at this point, let me just delete this one so that we have a plain market. We can add that, we can draw them later. So looking at this candlestick at this point, probably this market was giving us a retest at this point. So it came down to this area, giving out a retest because it broke above this area. You can see this weekly candlestick did close above this area. So we had this area at this point. This was our key area at this point, whereby the market went down and closed above that area. After closing this area, so this was probably a retest. So there's a possibility of this market pushing all the way to this area and again pushing all the way up here, probably before we start looking for sell entries in that market. So this is a possibility that might happen. This is a possibility that might happen. So we may push all the way to this area, probably have something like this. Probably after pushing all the way up there, then we might have something like this. Then we push all the way to this area. Why am I saying like that, guys? So the reason I'm saying like that, so if you can see this, the first thing is this an inverse head and shoulder at this point. And when you can look at this point, and if you look at this market from this area again, if you look at this market from this area again, this is something like an inverse head and shoulder at this point. So there's a possibility of this market coming down, going up, give us this head at this point. Then there's a possibility of it pushing all the way up to this area. Then it should come down, give us another right shoulder at this point, probably. Then before again we look for another entry to take all the way up there. So these are two key areas that we should be looking at in the market. But if this market does close below this area, then that means that this area, that means that this analysis has been invalidated, and now we should be looking for us to push all the way down to this area. Then after reaching this area, probably the market might give us this double bottom at this point. Then we should continue pushing upwards. But if it doesn't, then it means that if it breaks below this area, then we should be looking for our entry to push all the way to this area down here. So that's the Euro USD. That's what I'm looking from the weekly time frame. Let me go down to the daily time frame and see what the market is doing there. So from the daily time frame, this is what the market is doing. You can see still we are on a downtrend. We were on this downtrend at this point. So the market broke above this area. We broke above the channel. we had this downward channel that we are having at this point, and I think it was serving as a correction. I want to zoom it in so that we can see together and see what is happening there. So this is what happened at this point, guys. We had this downward channel that this market broke above at this point. So we broke above this with this bullish engulfing candlestick, this very strong candlestick at this point. So we closed above that area. This market went up, broke above this area, closing above this area, which means that we did close above this key area that we had at this point, but the market again went down to give us a retest to this area at this point. Let me see. So we had this point at the we had this key area at this point. Let me draw again this one. From the daily time frame, we had this key area whereby after the market breaking above this area, it came down to retest this area at this point. Then you can see this daily candlestick did close above this area, and I've already told you guys that whenever from the monthly time frame, whenever we have a bullish candlestick from the monthly time frame, that means that from these smaller time frames we should be looking for buy entries in the market, and that's the possibility that I'm looking at in the market right now. So there's a possibility of us. So there's a possibility of us looking for buy entries from next week at this point, if this market does break above this area, because we have this key area at this point. And so if this market does break above this key area at this point, then we should be going in for our buy entries, whereby we have our first take profit at this point. Then our next target will be all the way up here. So that's from the daily time frame. I want us to go to the 4-hour time frame. This is the 4-hour time frame. This is what is happening from the 4-hour time frame. So previously I was looking for sell entries at this point, but as long as the market stays below this area, that means that we should be looking for sell entries. So as long as the market stays below this area, which means you should be looking for sell entry, but those are short-term sales, because as long as we are inside this channel, that means that we can still take advantage of that short-term sales. So but if the market breaks below this area, let me show you. So if the market does break below this area, then now we should go in and have some kind of long-term sales, probably all the way to this area, take our first take profit at that point, then we continue pushing to the downside. That's the possible scenario that can happen at this point. So this is from the 4-hour time frame. And also, when you can look at whenever you look at this market, the way it is. Let me show you what is happening at this point. So when you look at this market, come on, this one, what's wrong with this one? So whenever you look at this market, let me just take this back a little bit and show you, because we're already done with that. So when looking at this market, this is the 4-hour time frame. Look at this market. When you look at this market has been on an uptrend, and being on an uptrend, at this point the market went all the way and broke above this area, this key area that I was telling you about. This market went up and broke above this key area with an impulse move. So we had this impulse move all the way from down here. We had an impulse move all the way from down here. We had that impulse move, we had a correction, then we had another impulse move, we had that correction, we had this impulse move all the way up here. So this market was giving us this correction probably before we continue pushing to the upwards. So this is the possible scenario that might be happening at this point. And whenever you see, and when you look at this market, it's respecting actually these structures. This market is respecting these structures, because after having this impulse move, we came down to this area, it failed to break below this area. Then after failing to break below this area, we pushed all the way upwards. Then the market is at this point right now. So at this point, this is the possible scenario that might be happening at the point. So let me just take this back again and show you what might be happening at this area up here. So after this market giving us this impulse move, we have this correction. Let me show you from all the way from down here to this area. So we're still in a correction. Area from the 4-hour time frame. We're still in a correction. We are still on a correction, but when you're looking at the market from the smaller in the short-term perspective, at this point, as long as the market stays below this area, that means that we should be looking for sell entries from this point, as long as the market stays below this area. So if the market does break above this area, then now we should be looking for long-term buys and hold it all the way up there that I was looking. So let me just draw the key areas from the 4-hour time frame. So this is the key area that we're looking at the moment. We had this area up here, we had that one, then we have this one down here, we have this one. So if the market does give us opportunities to take a few sell entries from this point, maybe we might take our entries from that point and scalp, and maybe they trade it all the way down here. Let me show you. Maybe from all the way up there, we take that short-term sell from that point, then we have our stop loss just right above this area. That's about 22 pips stop loss. Then we should target about, let me see, that's about 36 pips. That's about 42 pips, of which, guys, it's not worth it. So maybe if you just want to take that quick scalp, you can take it, but I don't think it's worth it. It's better for you to wait maybe for that big move. But if you just want to take an entry, this is a possible thing that can happen at the market. Let me go down to the 1-hour time frame and see what is happening from the 1-hour time frame. So this is what's happening from the 1-hour time frame. This is what is happening from the 1-hour time frame. The 1-hour time frame, we are on a downtrend. This market is on a downtrend in the 1-hour time frame. This is the key area that we're looking at this point, whereby the market came and failed to break above this area and continue pushing to the downside. Let me show you. So this is the key area that we have from the 1-hour time frame. The market came all the way to this area, failed to break above this area. So there's a possibility of this market pushing downwards to give us a correction probably before it continued pushing to the upwards. So that's a possible scenario that can happen. So if this market does do something like this, there's a possibility of this market doing something like this. So we have this key area at this point. We have that key area at that point. So there's a possibility of this market, after breaking all the way, after moving, it came down to this area, give us this double bottom at that point. Then after giving us this double bottom at this point, pushed all the way up here with this impulse move. Then it failed to break above this key area at this point. That means that we should have a correction probably to this area down here. We should have a correction probably to this area down here. Then maybe we should push all the way upwards, do something like that, break above that area, give us a retest probably before we continue pushing to the downside. Why am I saying that? Yeah, why am I saying that? It's because when you look at this market, there's a possibility of it coming down and giving us these. We had this left shoulder at this point, we had the head at this point, whereby after having this head, the market again gave us that double bottom at that point. We broke above this area. So there's a possibility that this market might come down, give us the right head at this point. Then that retracement that is going to give us the right head might serve as a correction again. Then after that, we should wait for this market probably to break above that correction area. Then we take our entry all the way, maybe from this area down here, have our take profit at this point. This should be our first take profit at this point. Then wait for the market to break above this area, maybe before we take other entries and swing it all the way up there. So that's the possible scenario that can happen in this market. But for you to take your entry, your short-term sales at this point, this is what you should be doing. For you to take your short-term sales at this point for Euro USD, you should wait for this market to break below this area that it did create at this point. So we had this area down here. Let me show you this key area that we should be looking for. So for you to take your sell entry at this point, you should wait for this market to break below this area. Then after this market breaking below this area, maybe you can take your first sell entry from this point. You can take your sell entry from this point. Have your stop loss just right above this area, about 15 pips stop loss. About 17 pips stop loss. Then this should be your target down here. This should be your first target. This should be your target down here, about 21 pips, guys, of which I don't think that's a 1-to-1 risk. I don't think it's good. So, but if you want to scalp, you can take that, but I don't think it's a good entry for you to take, because those are very few pips to be looking for in the market. Yeah, so that's what you can do. And actually, it's not a must that your stop loss be up there. You can probably have your stop loss at this point, about 8 pips. Maybe if you're risking 8 pips to go for 21 pips, that's a good scalp. You can take that. Yeah, so if that does happen, you can take that. Then you have just your stop loss just right above this area. Then maybe we should wait to come all the way down there. Then we look for our buy entries from that point. So this probably what might happen in this market. Let me show you. So this probably what might happen in this market. We might have something like this, whereby this market is giving us, we might have something like this. So maybe we might have something like this, whereby this market will come to this area. After breaking below this area, maybe we should come down here. Then again we go up there, come down here, give us our third touch. Look at that point. Then we come here, break above that area, then take your entry from there and push it all the way up. So that's probably what might happen in this market. So that's how I'm looking at the Euro USD at the moment. That's how I'm looking at the Euro USD. Let me go to gold. Let me go to gold market, to the gold market, and show you what I'm looking at in the gold market. Then I end this analysis at the point at this moment. Then yeah, we meet again when the market opens. So I want to do a quick review on this, what I'm expecting this to be doing and what happened. So this is what the market has been doing from gold. Last week we were on this uptrend. The market broke below this area, pushed all the way to this area. It didn't give us entries at this point. I was expecting to get entries so that I should swing it all the way down here, but the market pushed all the way down here, not giving us entries in this market. So I was expecting that if this market fails to break, I was expecting that this market should give us at least a retest after giving us, I was expecting this market to give me at least a correction before I take my entries in the market. So the market didn't give me those corrections. So I still pushing downwards. As you can already see, it's very strong, pushing downward, very, very strong. And there's a possibility that on Monday, because the dollar index, we saw that there's a possibility of the dollar index giving us a retracement before continuing to push to the downside. That means that if that does happen, if the dollar index that does give us that retracement, there's a possibility of this market to pushing all the way to this area, which was our final target. Then after that, now it reverses again and starts pushing to the upwards. But the only time that you should be looking for buy entries at this market, if at this point, let me show you. At this point, if this market does take out these highs that it did create at this point, let me show you what I'm looking at the moment. So this is what this market has been doing at this point. After pushing all the way down here, we had this key area. At this point, we broke below this key area, but the market didn't stay all the way down there, which means that we still in this key area. At this point the market is giving us something like a double bottom at this point. So the only time maybe probably that you should take your entry at this point, the only time that you should take your entry at this time is if we break above this area. Then looking at the DXY, if that DXY is giving us that correction, then we should expect. So if the DXY doesn't give us that correction, then we should expect to break above this area and then take our entry, having our last target at this point. So this should be our first take profit at this point, then our last take profit at this point. So that's probably what I'll be looking at in gold. And if it does give us a breakout, let me show you. Again, when you look at gold has been giving us these kind of structures. We've been having this impulse move. We had that impulse move all the way from up there down here. So I was expecting probably this market to come up and giving me that kind of correction. After giving me this correction, then probably break below this correction area. Then after breaking below this correction area, give me a retest, then we push downwards. So that's what I was expecting gold to do, but it just went all the way down there, didn't give me that opportunity to take this entry. But if it does give us opportunities next week to take the entries, we should just jump right in and just kill it. Yeah, that's what I'm looking at gold at the moment. So yeah, I'm waiting for the market to open, then after that we see what kind of entries we can get in this market. So this is Profit and Edge, which yeah, so thank you for watching, guys. This is Profit. Yeah, so thank you for watching, guys. This is Profit and Edge signing out. See you in the next video.